it will not change anything like that, right? It's a constant over a period of time, and like the the new price material are marked and released. So that is what happens in the standard cost. And of course, recommended for all types of materials, not only raw materials. It can be, most of the time SAP says that your finished goods has to be, not has to be, but normally should maintain in standard cost. Whereas there are some companies which use standard cost or standard price for all the materials, so that you are constantly evaluating your inventory with the same kind of price, and the differences will go into the variances. Okay. So,
Raghu, can you go back to that screen? So you're saying it's quite common for most of the companies having both the prices, right? Standard price and moving average price for different materials.
That's correct.
They maintain both.
Yeah, that's correct.
Okay.
Yeah, but like in US, majority of the companies which use standard price, right? Even for raw materials.
Okay.
Right. So there are certain challenges for the moving average price, but the thing is that moving average price means what happens is that the price is getting adjusted all the time, right? So
that is good.
The
price is adjusted all the time when a receipt is made. What do you exactly mean by that, Raghu?
Yeah, so I will show you one demo, like what exactly happens, price change and all that. I'll maintain one material with the moving average price. I'll show you that demo. Okay.
Good idea. Yeah. Okay.
Yeah. So then here, okay, let me. So if here, let me just complete this. Right. So let's say raw material procurement. If you are having a moving average price (MAP) daily, so the price will the fluctuate, right? So the cost of that raw material price will fluctuate, and there is no price variance. When I say price variance, so the raw material price is changing, right? So which means the inventory value itself gets adjusted, right? It will not post to a separate price variance account. Okay. But ultimately what happens, right? If raw materials are fluctuating, when you consume them into the production, then you will have a production variance, right? Because, for example, you said you produce a material with two components. One component you said like $100, and another component you said like $200. Let us assume. So the $300 was the input price earlier, right? But now when they are consuming, so now they are consuming at the changed price. So it's $100 may become 150, or $200 become may become in 275, right? So since your input prices are changing, so this will result in your production variance, right? Whereas if you are using a standard price here,
what do you mean by input prices? Say, suppose you are procuring one product for $100.
Right.
Today, let's say on September 1st, and you wanted to procure that material. You wanted to use that material for production purpose maybe on September 10th.
Right.
So that means you are issuing the goods for production. So
right.
That between the 10 days is going to change. And how?
Yeah, so the thing is that, say, the production, when you say the production, right? So let's say you have a finished goods like P1, right?
Okay.
And then this P1 has got a BOM materials of two materials, which is like raw material 1 and raw material 2, right?
Okay.
So normally when you estimated the price for this standard, right? You had some price at one point of time, some price at one point of time, right?
Okay.
So then you said like, okay, let's say this is $100, this is $200. Assuming that nothing else is there, this is only two input materials you are using, right? And so the standard cost for this material will become 100 plus 200, this is 300 plus maybe let's say $50 for your making charges. Right? Yeah, overhead. So $350, right? So now this is again production, right? Whenever you are producing this material is valued with $350 inventory value. Do you agree?
So it's before issuing to the production. That's fine.
Yeah, this is no before means like when you in the production process, right?
Yeah.
You issue materials and this product will come out from the production, right?
Oh, okay.
So when you come out, it is valued like $350 worth, right?
Oh, okay. After completion of the production.
Yeah, after completion. So that is what after completion of the production it is 350, right?
Okay, I got it.
So now suddenly raw material price now shoot up by let's say earlier it was $100, now it is $150.
Okay.
Right? Now means like when you procure now it is 150, right? Because of the price adjustment, right?
Yeah, that's okay.
And then it is like this is $300, let's say. Okay. So now when you consume these two materials into the production order, right? The value at the debit side here is how much? $450.
Yeah.
So now just because the input prices are 450, you will not change the production value. Here you still take that as 350 only, because normally finished goods is always a standard.
Okay.
Right. So now $100 is the production variance. Do you agree?
Yeah.
Yeah, that's what I was referring by production variance. But if you take the same example here, so there will not be any production variance because your raw material cost is always same, right? But if the price is changing, the change is reflected in the price difference account itself, not in the production variances. So which means, for example, here when you procure, your raw material is still valued at 100. I'm talking of raw material 1, right? And then $50 will go into the price variance account. So then this is like separately you are taking. So which means either if the prices are changing, either way you use this or this, right? You will have variance anyhow, right? Because the standard you establish and the prices are changing, right? But what kind of changes? Is it a price variance or is it a production variance? Is the reflection of if you are using standard, it is a price variance will be impacted, and if you are using moving average price, there is a production variance impacted. So if these are two things anyhow you are impacted, it's better you use standard cost even for raw material, right? And deal with price variances separately.
Okay.
Raghu, can I ask one question here?
Yes, please.
Yeah, Raghu, so for price variance, your price variance means the standard we have like expected from that particular production by the inputting raw material. So that variance counts, what is the actual price of the material and what is the standard price of material, that variance counts for the price variance.
Yes, so you are talking of this one, right?
Right.
Yes. So I will show you one example of both, right? How the price is impacted here. Okay.
Okay.
And then we'll come back and discuss this. I think that way it will be much more easier.
Okay.
So now I'm going here and log into SAP. Right. So let's create a material. Let's say MM01, a fresh material. Let's create. Material number 8, right? And let's say mechanical engineering and raw material, right? So I'm just creating basic data and then accounting view 1 and 2. So we don't need costing views, but you can still have them if you want. So I'm just putting 3000 and raw material with the moving average price. I mean, just for understanding. So I'm just giving the valuation class, obviously raw material valuation class. Okay. So now I am using here moving average price V. Okay. And then V price. I don't require to maintain anything here, right? So it will say okay, price control V, enter moving average price. Type moving average price, let's say nothing is procured, maybe you can give $1 or $0, doesn't matter. right?
Mm-hmm.
So I'm just giving 0 value. Right now nothing is there. We go and see this material one more time. 3000, right? So the moving average price 0. So you might have watched it, right? So you cannot change now.
Yeah, correct.
Once moving average price is maintained, so it cannot be changed, right? So the 0 value was there, that's fine, right? Now let us go ahead and do an inventory movement.
Okay.
Okay. So just 1 second. MB1C, right? I'm just giving again 561 movement. This is a great way of checking the values, right?
Yeah.
And 0001, right? I'm going inside and raw material 8. I'm just taking that, right? And now here, right now it is not validated, right? So I'm giving $10 here, right? So if I enter right now like this, because system does not know any price, right? It does not even like enter any price. So accounting document will not even be created for that, right? Because there is no price and you are just taking the inventory, right? So I'm double clicking on and putting that price like for 10. Let's say I'm putting this like $1,000, okay, as a value for that, right? And I'm entering that. So now let me go and see the accounting document. So this is a material document, right? So accounting document, if I go and see, obviously. So here there is no variance, right? Just like $1,000, because earlier there was zero cost, right? So the $1,000, and now this is contra entry, right? So now I'm going to a material master. You see now what is the moving average price? $100, right? So now this is fine. This is good, right? So now whenever if you issue material to the production now, Bhushan, it would issue at the $100 price. Okay, per piece $100. Okay, so now I'm going again MB1C, and this time I'm making one more like round of procurement.
Okay.
Right. Again, I'm making 10 quantity, but this time instead of $100, I'm like I'm giving like maybe 10 quantity, not 1,000, but 80. Let's say 500. Right. The total value is 500. So which is like here earlier it was like whatever the value was there, now when $100 was there, now it's like $50, right?
Okay.
So I'm just saving this. So now how much is the total inventory in your stock? It is $20, 20 quantity, right? But the value, like moving average price would be so if you go and see, yes. So like MB03, I'm just going here and looking at that accounting document. So again, there is no variance at all, right? So just $500 as it is taken, right? So and I'm going to MM03 and looking at that material master now again.
75 again.
Is it 75? So now if you issue the material to the production, it will issue at $75.
Okay.
Because that is the valuation it will take place, right? So even so, like whatever the way you procure, but this is the cost it is going to use for your issuing. Okay.
So in the moving average price, in the real time, we don't maintain any price.
You don't require it, right?
So because it will take from the prices directly from your purchase order and from the goods receipt, right?
That's correct.
Okay.
Because
we keep on adding to the original cost.
Yeah, it keep on adjusting the price price for this thing, right?
Yes. So it depends upon how much quantity you are procuring.
Yes.
Okay. So now we saw the one side of it. Now let's see the product other side of it. When you see it, what happens, right?
Yeah. So let us issue the same material now, right? So let's say there is another transaction called MB1A, right? So which is for issue, right? So I'm issuing to a cost center, right? So issue to a cost center.
201 is the movement type.
Yeah, 201 is the movement type for the cost center issue. So here I can take the same material, and let's say now we issue 5 quantity to a cost center. Let us have a cost center, right? Any cost center should be okay, and then it is issuing for cost center. So 5 times 75, right, would be the value, right? So let me save it. You see now this is what the value.
But this should not change any price on the material master now, right?
It will not.
Yeah, it will not because we are only issuing, right?
We are issuing, right?
Yeah.
Right. So the value which you are it's not going to change the price, right? Moving average price. So that way, so let's go and see that.
Just look at this account. It's a 4,000 raw material account is a debit, and inventory account is okay.
Yeah, inventory is reduced.
Yeah.
And 4,000 is a raw material consumption, right?
Okay.
This is a P&L account actually.
Yeah. So because it's issue and that will become under P&L, right?
Yeah, because that is a cost center, right?
Okay. So we will look at this account determination later in what we will see.
Yeah. The account determinations and all that we'll see in more detail way, right? Yeah. So I'm going to MMO3, right? So same raw material. So now let's say 3,000 plant. So here 75 it doesn't change, right? So now the stock is only 5 there, right? So it's going to go like that, okay?
So the total value is what? That's for 15. Quantity 15 now. That's the total value, $1,125.
Yes. For 15 it is 15 times 75, right?
75.
Or you can say that reduce at inventory. It's now up to this price is remaining only.
Yeah. So this is the inventory which is 15, right?
Yeah.
And it is valuated at $75 per piece, which is the total value is this much.
Right.
Yeah.
So Raghu, just one question. So standard price could be changed. The moving price is always getting changing. Like during the period between, period wise, how can we say that? Like it's month wise, or we can maintain the moving price? It depends on the companies to company.
Actually, moving average price changes every second.
Yes. Yeah.
Because depending upon the movements that are happening.
Okay.
Okay.
Because you are in real time, if you see, they may be procuring materials like left, right, center, right?
Yeah.
So, and one danger of moving average price is, right? For example, let's say this is a moving average price of $75, right now.
Yeah.
And then one purchase order they raise, right? They raise it for the $75 only purchase order. So then when they procure, it is okay, right? Like $75, there is no change. Then it will value at $75, and there is moving average price of 70. Yes.
One question I have. Okay, now that's a good point you mentioned now. So now this material, whatever is this material that 008 now we have a moving average price is $75. Now I want to procure another 10 quantity. If I go and create a purchase order, the price is going to be 75. The system is going to pull from here.
No. Say this is the inventory value, right?
Yeah. Okay.
And if your vendor is ready to give you for $2, you are ready to take it, right?
Yeah. Why not?
Right? So this is nothing to do with your purchasing price.
Okay.
This is the inventory valuation in your accounting.
Okay. Got it.
And also the same way sales, right? For example, if you by any chance if you want to sell this, if somebody is willing to pay $75,000 per one piece, you are ready to take it, right?
Yeah, why not?
So the price, the standard cost or the standard like moving average price is nothing to do with your procurement prices and sales prices.
Okay, got it.
And it goes with the common sense also, right? Like, I mean, this is just inventory valuation. Okay, but the point I was trying to make, right? For example, you are going ahead and making a purchase order for $75.
Okay.
And there is no problem, right? So moving average price will be same and all that, right?
Correct.
By let's say by mistake, the purchase order instead of $75, they entered $7,500 by mistake. Okay, and then they made let's say one procurement. Okay. And then like after 3 days they realized that they entered a wrong price. It's fine, right? So they will inform the vendor and the vendor will properly pay it, right? But unfortunately, by the time you realize this moving average price is already adjusted, right? And whole bunch of other materials are revaluated, right? With that $7,500 for 3 days, it is posted with that value.
Yeah.
Do you get it?
Yeah.
So the longer that you take to realize the problems that you had, the more difficulty that you will have to recover that.
Fix that.
Because like thousands of materials you are procuring, right? And then and also you are issuing to the production also. It's not only one place; it is cascading effect.
Somewhere, right? For not happening with that.
Yeah. So that is the reason. If you use standard cost, then that problem will not be there. In the standard cost, what happens? You directly posting to account, and that account you monitor every day. That's it.
Okay.
And not going to impact. I will show you that in a moment, right? So, but is it understood now here?
Yes.
The moving average price, how it is changing?
Yeah. Okay.
Okay.
So,
And now let me create a material with the standard cost. Okay.
Oh, okay. We are not going to the production side now.
So production side we have seen, right? That issuing to the cost center itself you have seen, right?
What happens when the production is completed with the same material?
What is that?
What happens when the production is completed for this same material?
You are not producing this material, right?
Correct. We only consumed it.
Yeah, we consume. So we will never produce the raw material, right?
But we are using this raw material to make something.
Yeah. So that's what I'm saying, right? So this is issued to production at $375.
Okay.
Right? So instead of a cost center, there will be a production order here.
Okay.
So then the production order variance will be there, right? So if at all you are going to use for the production. So issuing material itself is a production side, right? You are issuing to the production order or cost center. You can issue to wherever it is, right? Whether you are issuing to a cost center or production order, same thing, right?
So the moving average price cycle ends here. That's what it is. Not moving further.
Yeah, moving average price cycle ends here. Yeah, right.
Okay.
So and in the production side, there's a big history, right? Like you have to have a production order creation, and then it's a big ocean on its own.
Exactly. Yeah.
Yeah. But like to understand the concept, I have given the like cost center.
Okay. That's good.
Okay. So then now I'm creating.
In the real time, it can be issued for anything, right? Like maybe a project WBS element or a cost center or a production order, anything, right?
Yeah. So for example, if you see MB1C, 1A, here if you see here, so these are all possible issues.
Okay.
Right. For example, warehouse, consignment stores, pipeline, or issue consumption. All this is called consumption. You see here.
Yeah.
And for sales orders, consignment, like that, quality and restricted, blocked stock. Project. You said just no project, right? Yeah. So it can be issued to anything. There is nothing like. Normally, 201 is for cost center, right? And order is here 261. You see here.
Oh yeah. Okay.
So this is used for the production order. Is it clear for you?
Yeah.
Yeah. So again, just here, right? So let me go back to. Any doubts on this moving average price, Yogita, for you?
No.
Yeah. So every time when we are doing that moving average price, right? What is happening is if you go to MB103, the accounting entry, right? So it's posting with whatever the accounting entry is supposed to be, and there is nothing like raw material is reduced, and it's of course the consumption account is posted, right? So now let's go and create a standard cost material. Yep.
The moving average price. Okay, we procured that material at one price, and we posted the goods issue. So the moving average price is updated for that material. That's fine. Now when we issue a material, do we need to mention the price of that material, or the system is going to pick up automatically?
99% of the time you will not.
Oh.
Okay. But 1% of the time.
Manual intervention.
Yeah. Because when you're issuing to your stock, right?
Correct.
You have already stock which is validated at one price, right? Normally, issue will take place at the same cost which you are showing in your inventory.
Correct. Yeah.
Like whatever you said, okay, this is what my inventory is there. This is what the total value, and that is the value you will issue to your inventory. You will not change the price at the time of issue.
Correct. Yeah. There is no need to, right?
There is no need to. But unless, like for example, auditors come and then they say that this material you are showing in the stock like right now as $100, but it is 1 penny. Okay, for whatever the reasons, right? Or like then you can scrap the material value, right? Or you can restate the material value with different prices.
Okay.
We can adjust the price like that.
Yeah. Okay.
So is there any functionality to reset the price at that time also?
Yeah. I will show you that today.
Okay.
I'll show you that. Okay. So just hold on that.
Okay.
So just since you raised that question, right? So MB1A, for example, again here 201, right? And then cost center. I'm just giving cost center here. Same material quantity. Let's say now 5 materials. I can go here. Say 5 materials issue at $5. I mean here it is nothing is there. You see, you don't even have an option, right?
Oh.
So like normally when you are taking the value for goods receipt, right? You had option for entering the price here, right? But right now you don't have anything like that.
Goods issue, yeah, okay.
Right, because the goods issue is validated at whatever the standard like whatever the price which is there.
You have not given any field to enter the price here. That is good.
Yeah. That's what I was looking at. I mean, if it is there, I would have entered here, right? And then you see here, anywhere it's not there at all. So it doesn't even have an option, right, to maintain that price. So I'm just issuing that, so it is validated to $75. Okay, so let me create another material here, 9. Again, I'm entering the standard cost only here. So again, raw material with the standard cost, just right here, by default it is SE is there, that's fine. We'll just take raw materials and so enter the standard cost here, right? So maybe we can enter, let's say $100, right? And then that's fine, right? So once you enter first time, then next time when you come here, you cannot change this. Okay, so that is done. So MB1C goods receipt, one more time I'm doing that, right? Not 10, 20, right? 561, sorry. Right? So raw material 9 and 10 quantity, obviously, right? So now let us take as it is and go and see MB03. So there is a material document which is posted. That's fine. Everything is good. Inventory is increased and your contra entry. And going to MM03 and for the raw material 9, right? And then you have again here 3,000, right? So now this is $100. Sorry, SC is $100. So that's evaluated here, right?
Okay.
And please observe one more thing, right? Even though it is a standard price, your moving average price also gets calculated, okay? Just for statistical purpose only.
Oh, just for statistical purpose.
Yes.
Okay.
Okay.
So because that means you can run a report on that also?
Yeah. I mean, you can run you can make manually this times this is what is the moving average price, right?
Okay. But that indicator of price control is most important to find out.
Yeah, this is the indicator which is used whether this field or this field.
Yeah.
Okay. And then if I go and change, right? So now my statistical price I can change all the time. There is no system will not prevent me to change it. You see here I can go and change any price here.
Okay.
So because this is a statistical, but I cannot change here.
So once you set the time account, you can know where you can come back and change.
Here?
Yeah.
I will show you how to change that.
Okay.
Okay. So but right now you cannot maintain that from the material master. Okay.
Okay. There's some other concern.
That's right. So and then now if I procure another 10 materials with $50, right? My total value would not be 1,500. It would be 10 times 100, which is 200.
Raghu, just a second.
No problem. So Bhushan, if I procure with 5 materials, say 10 materials with $50, right? The total value here would not be adjusted. It is always valuated at $100 only.
Okay. Because it's not moving average.
It's not a moving average price. So that's what I am going to show. Okay.
So this price, either it is a standard price or a moving average price, this price is always for the what is that internal management purpose, and to come up with the figure how much it costs to make that product, right?
I would not say like that. It is not internal management. It is for inventory valuation.
Okay. Maybe that's the right term. Yeah, inventory.
Yeah, it's nothing to do with management, right? It's just inventory valuation as per your government standards. You have to have your inventory prices.
Okay. That's the right term. It is for the purpose of inventory valuation.
That's correct. You have to say that inventory valuation.
Inventory valuation. Okay.
Yes. Okay. So now let's go ahead and procure material. Maybe one more time. I'm just 561. This time I'm just the same material and same quantity, but let me say instead of $1,000, I'll say $500.
Okay.
Right. So now, if you go and see here, the material document, accounting document here, here itself, the inventory is still valued at 1,000, right? And then the price variance is impacted here. This is the price variance.
Okay.
And if you go and see your inventory, still it is $1,000.
Okay.
Okay. So in the real time, what happens, right? Every month, accountants will look at what is the value of this price variance. Okay. Ideally, it should be zero, right? Because you should not have any variance. But if there is a variance, then they have to adjust their inventory value by that much amount. Because now you are showing your inventory 1,000, right?
Yeah.
So which means actually this is not 1,000, right? It's actually it is how much? It is just $500, right? So they have to make the adjustment entry at the month end.
Okay.
It's all they want to. Normally they don't do. Normally they don't do till the year end.
Oh, is it?
Yeah. So then they will come up with like what is the total variance and they will adjust that. Or quarterly they do. Again complete to complete they change.
Okay.
And or they may create a reserve, right? They will say that price variance reserve, right? And then positive or negative they will pump into that and they will show into the balance sheet that adjustment, right? So, for example, if you don't show this balance sheet, what happens? This is the income you are showing as a $500 income, which is not correct, right?
Correct. Yeah.
I mean, how it is income? Because you valuated one side your inventory $1,000, right? So obviously, you paid $500, right?
Okay.
I mean, think like that, right? You paid $500 only, right? In a way.
So that means you gained 500, right?
Yeah, that is what the gain, right? But it is not real gain, right? It is a like hypothetical gain, right?
Exactly.
If you don't adjust this into your balance sheet accounts, then you end up paying tax on this.
Oh, okay. That is the impact of it.
Yeah, I mean, it will have a lot of implications, right?
Okay.
Raghu, what is this posting key 93 is representing?
Posting key, don't worry, right? It's like, I think a credit for yes, right? Or credit for GL account. You see the price differences.
Okay.
Credit. General ledger credit price difference.
Okay.
So in the real time, Raghu, this $500, how does it arrive? Why do we think that is the price coming from the purchase order?
Yeah. So let's say you are in your inventory, you are valuating it $100, right?
Correct.
Suddenly, one vendor sold you for $500.
Okay.
Right. So now you paid $500 only, and you took the stock. Yeah. And in the stock, you jacked up the price, and you are showing $1,000, right? Whereas you paid $500 only, right?
Yeah.
So which means if you don't do anything, then it is a gift from God, $500. You got it from your vendors, right? Because you are showing inventory value as 1,000, right?
Yeah.
Whereas you paid only $500, right? So you should adjust your inventory value, right? Or you should make a provision that there is a price difference of $500, right? And show in the balance sheet that like no, okay, it is like the price variance, right? And either you show liability side as your price this thing, or you show the balance sheet side with a reduction.
Okay.
Sorry, asset side as a reduction, or liability side as a your liability.
So that's when happened. You posted an adjustment for this $500.
Yes.
Oh, that you said it's going to do it at the end of the year.
End of the year or end of the month, if they quarterly report they are having, end of the month also they will do.
It depends. Okay.
But it is very easy, right? Because you are collecting in one account.
Yeah.
Right? And what they pretty much know. So for example, suddenly they have seen $10 million in this account. Immediately, everybody will be activated to trace it out. What happened, right? So then immediately they will catch who made the mistake. Like somebody made mistake when they are entering the purchase price.
Yeah. Okay.
Okay, let us go and see what happened in the metal master, right?
Okay.
Nothing happens there actually.
It shouldn't be actually, yeah.
Because the same price, right?
Yeah, but the average price might have changed.
Yeah, now your stock value is 20, and it is still $2,000.
Yeah. Okay.
So the net effect, if you see, if you draw a balance sheet right now, it will show inventory stock value of 2,000 in your asset, right? And then equivalent of that, right? So like now your liability side should be represented by whatever that the value that you took it for this particular thing, right? So initially you remember that contra entry that you have been posting, that would be initially you posted 1,000 and next time you posted $500, right? So the contra entry in the liability side is 1,500, and then price difference also you should post into the liability side, $500. So your fixed assets, assets and liabilities will be equal.
Balance, yeah.
I think if you are accountant, you will make it out, right? What I am trying to say.
Yeah. I'm not an accountant. I'm an engineer. That's a problem.
Yeah, I mean, Yogita, I think you can make it out.
Yeah. Okay. So that's good. So we saw the price variance for the standard price. For the moving average price, we didn't see the variance, right? We didn't check that.
There is no variance, right? Moving average price, the inventory value itself will adjust, right?
So no, you said there's a production variance, right? In the slide, if you go back to the slide.
Production variance in the case of moving average price.
Yeah.
Yeah, production variance is not direct, right? It is indirectly will happen, right? So when you go and produce, now there will be variance.
Oh, produce and then issue it for sales. That time it will.
Okay. Yes. That is a long-term implication. Whereas the procurement, you can see that.
Yeah. Okay.
For example, if you did not produce anything in this year, Bhushan, you will not have any production variance.
Absolutely. Yeah.
Right? Even though you had a moving average price differences, right? So like that. But in the procurement side, like if you are using a standard cost, then immediately the price differences are posted to the price difference accounts.
Okay. So is it a debate for the companies to choose for the standard average price or a moving average price? Is it going to be a big discussion, or how is it? On what basis they decide this, Raghu?
There will be a big discussion, right? There will be a big discussion. Normally, the consultant also.
Yeah.
So they will make them to go first.
Hello?
Showing them like, no, these are the problems, you are going to have it, right? It depends. So it depends, right?
Okay.
But there will be always discussions.
So, but
Hello?
it is not common that.
Hello, Yogita, are you there?
Yeah.
Yeah.
It is not common that. So, Raghu.
It's not common what?
So it's not common that every company will go with only just one, either only one standard price or the moving average. So it's always mixed both, right?
Yes.
For the raw material, the moving average.
So most of the time, like companies for raw materials they go for moving average price.
Okay.
But again, they can go for either one, doesn't matter. But for finished goods, they should go for standard only.
Okay.
Because finished goods is that one you are producing, right? It is not you are procuring it, right?
Yeah.
And why do you change the price all the time? Because you produced it. At least you should have one standard, right?
Yeah.
Unless this is a trading good that you also procure and sell.
Raghu, I have one question here actually. Sorry to ask you. See now, the raw material RAW M8009 is a raw material master. We procured it, and we use this material and some other material to make one product. And when the product is ready, we have to create one more material master as a finished goods, right?
Yeah, that is finished goods, right?
That time is there a relation between that master and this masters? No.
Yeah, there is no relation directly, but there are like in the part of the production planning, they maintain that a bill of materials and all that. So there is a relation there.
Oh, okay. Yeah, I got it.
Yeah, so
BOM is the only relation, maybe.
Yeah, BOM is the only relation.
Oh.
So here, one thing if you observe, the moving average price is still adjusted. You see here?
Yeah, I know. I already told you that.
Yeah. So because as I told you, this always gets adjusted, and it will show you like statistical purposes only. Okay.
Yeah. Okay.
So and sometimes what happens, you do like say you are procuring, right? Let's say you are procuring two types of materials, right? Same material, but there are two different grades. Okay. And one is that I'm creating now one more material. So one material, let's say you think of grade 1 and another material is grade 2. Okay. And grade 1 material is, let's say, it is $100 per piece, and grade 2 material is like $25 per piece. Okay. Same material, but like two grades are there. Best way is that either you create two materials, right? Or you use something called split valuation, where you can valuate your materials with the different sources. Okay. So I'm just going to show that. So I'm creating a material now.
The same material we are procuring from two different vendors with two different prices.
Yes, like that.
Okay.
Or like you want to maintain your inventory with the two different prices.
What will be the reason for that?
The reason is that, for example, you are procuring a material from China and you are making a material in US, right? Procuring from US, and China material maybe let's say $100 per piece, and US material maybe $500 per piece. Okay. So if you want to have segregation, the source of supply, right? And you can SAP gives the ability to do that.
Split valuation.
Yeah. That is called split valuation. Okay, let me show you that, and then we can discuss. Right, and I'm going here, and 3000. When same thing I'm doing, when there is nothing changed, right? Just because I'm writing in the text doesn't mean that it will become split valuation.
Okay.
I'm just kidding. So here, there is a field which is a valuation category, right? So if you drop down here, right?
Yeah.
If you drop down, there is like different valuation categories are there here, right? For example, D again, these can be configured. It's not that like you have to have only this, right? But one which is there, I'm showing you here. Let's say grades, right? You may have grades. So D. That's it. When you give here, right, D, then what happens? Now you are expecting that this material you create with a split valuation, right? The moment you say that creation at the split valuation, then the price control here has to be V, moving average price here. I cannot give like S, right? So because only price control V is possible for split valuation. Okay,
correct. Yeah.
So, but at the split level, it can be any control, price control S or V. But at the higher level, this is the higher level material, right? So let me change this to V, right? And no change any in the price or nothing. I don't even require to maintain the valuation class here. Okay, so I'm just entering here. So save it, right? So now again I will go and create this material one more time. Again create. You see in the creation mode. This time when I say create, when I say select accounting, then it pops up with one valuation field here. Okay, so 3000, and I select depending upon the what category you have given. In the drop down, respective value will come. You see here the grade A and grade B. Okay. Part of the configuration for the D, A and B are there, right? So let me take A and go here. Now again it presents you valuation class. If this is mandatory now, so you see here valuation type, right? So this is like you cannot change anything here, and then at the valuation lower level you can have S or V, doesn't matter. So let's have S here, right? For one material S here. Okay, and now I'm saving this, and let me go back again, create one more material for the same thing for accounting, right? Go here and say 3000, then let B here, right? And then go inside, and now let me give here a moving average price, right? So $50.
Yeah.
Right. So now this material is a split valuated material. Do you understand that?
Yeah.
So if I say change, it will this material has at three levels. One is the header level, one is at lower levels, right? For example, if I give 3000 here and don't give any valuation type, it goes to the higher level.
Okay.
Right? And if I go back and say organization level change here, and like let me go back, no change. So here, the moment I give here the valuation type, right, and it goes to the respective area of the valuation. Okay. So now let's procure this material, right? So system will force you to select either B or A.
Oh, okay.
Okay. So now let me go into MB1C, again same our favorite transaction, 561.
So to create that kind of material muscle, we have to create 3 times.
Yes, 3 times depending upon how many splits you have.
Oh yeah, okay, yeah.
If you have like 100 splits, you have to create 100 times.
Okay.
So now I am selecting here, let's say 10 quantity. The moment I put here, and it will drop, like pop-up will come.
Yeah.
So which one you are procuring? Is it like A or B? Okay. So let's say if you say A, right? Then it will, it will take in the batch field, it will populate that.
So when you are making a purchase order for this material, so
then also it will ask you to like which grade.
Sorry, Raghu.
At that time also it will ask you which grade you are taking.
Okay, that's what I was asking.
Okay. So now let me save it, and now like document is posted with A, right? So since it is A, so obviously it is a standard cost, right? So we are going here and looking at the document, which is just posted to standard cost variant. There is nothing like, right? And that GL account, which is referred as a work in process, but it will care about the description, right? Whatever the GL account is, the inventory account, right? So now let's go to material master and look at this material. Right. Now let's look at the higher level only. Right. Higher level. So obviously higher level it will show you 10 quantity. Right. Because the total overall materials with are 10. Right. So now, so the reason that at the header level it is V, which means the total value at the header level is the combination of the values at the lower levels.
Right.
That is the reason it is forcing you to have a moving average price at split level.
Okay.
Okay. So now I am going and procuring MB1C one more time, and this time like 561. Same material and give like 10 more quantity, and this time B, right, and I'm saving this. Right, let's go and MM03, right, and see the material. Right, so now let me go here. What happens? You see 20 quantity, right? So one was like 500, like one was $1,000, right? Like moving average is 75. Now if I go into the organization level, if I go to B grade, then it will show me what is the quantity there, right? And if I go to A grade, it will show me what is the quantity there. Okay, so this is called split valuation. Does it make sense, Bhushan?
Yeah, it does. But is it common having the split valuation, Raghu?
Yeah, it is like say the functionality is available, right? It is your responsibility when you go to a customer or your implementation, you have to show that this is what is available. Whether you have anything like this, whether you want to use anything like this. Okay. So now let's go, and these are the three things like now.
So now if I issue this material, what happens now? When I does it take separately a grade A and grade B issue again separately, deals with or it combines?
When you are issuing, right? Yeah, you have to issue like MB1C, right? So MB1A, let's go to MB1A. Right, so issue again 201 movement type, right? So when you are issuing also to the cost center, it will ask you like which grade you are issuing, right? So like it's say 10 quantity, right? It's asking you like which one is that, right? So just 1 second, let me go here. Right, so 201 and here, that is the material here. The material 10 quantity. Yeah, it has to give that, enter the valuation, right? So it is asking for the value. So yeah, I think it will be grade A, right? So let's go and view the grade A there. Right, the grade A is taken, right? And then it is you are issuing out from that.
Yeah.
Okay. So I mean it's straightforward thing, right? Yeah. So now I'm like now there are a couple of things I said like to the change price, right? So let us go back to MM03 and go to the first material we created like 8, right, today, which was moving average price, right? So moving average price in the 3000 material, and when I try to change that, right, so let me go and change that. Right here, I cannot change the moving average price, right? Here.
Yeah.
That's what we were talking about, right? So there is a transaction code. If you go here into the logistics and obviously materials management and valuation here, change prices, right? So here the change in material prices, MR21, you can give that and go here, put that material number here, whatever the material, material 8 was there, right? The moment you give that, it will ask you like, okay, what is the new price here, right? If you change to 85, right? So the statistical price is nothing but your standard cost, right? In this case, right? Standard cost is there, right? So like, let me save this. So now it's like what happened. If you see that there is a document generated for the price change, right? So it generates even accounting document also, because basically the price you change it, right? Right? Yeah, and then you go back to and see the material value now, right? For this material, right? You see here now it is $85, and the total value evaluated to $50. So then you made accounting entry also for that contra.
$100.
Yes. Okay, so does it make sense now?
Yes.
So here the statistical price is like standard price in this case. For B it is a statistical, so it is 0, right? I can go to again the same MR21 here, right? So that I can change that value. So the moment I put it here, it will come here $85. So now I can put like $100 here. Doesn't matter, right? So as long as I don't change this particular price, it's okay, right? It doesn't generate any accounting documents. For example, if I go here to this, there is no, as such, there is no accounting document because there is no impact on the accounting, right? So, but still you can go and see display material and for the 6 or 8, sorry, right? For 8 and for accounting. Right, you see this is $100 it changed, but like you still had a moving average price change.
So like what did we do now? For the moving average price, we changed the standard price. What did we do now?
In the same transaction code I was showing you, right? You can also change the statistical price.
Yeah.
This is one.
Oh, okay.
Earlier we changed this and see the accounting entry, and we changed this. We see the accounting entry, no accounting entry, and I shown in the material master.
Okay. If I want to change the standard price, this is the same transaction again, right? Instead of taking it, take a
yes, that's what I will go to change it, right? So no changes right here. So I'll go here and go there, and the raw material 9, right? So obviously you see here the new price for the standard, and the statistical is what is the moving average price here.
70, yeah.
Right? So the new standard, does it make sense, Bhushan?
Yeah.
Yeah, so if I change here from 100 to 200, obviously there will be accounting entry for this.
Definitely.
Because you are reevaluating your inventory by changing the price. Right? So you are going there and looking at the accounting document, and you said like, oh, my accounting is reevaluated with this much value.
This is not simply a changing the price; it's a revaluation of the inventory.
Yeah. You cannot change the inventory valuation price just like that.
Yeah, exactly.
That is the reason SAP prevented you from changing the price in the material master for the material with the respective valuation price.
Yeah.
If it is a standard, you cannot change the standard. If it is a moving average price, you cannot change the moving average price in material master. Because it has implications of accounting.
Yes, when the accounting document has to be generated, that's why.
Yeah. It is a process rather than the material master maintenance.
Exactly.
Okay. And then